You may not realize how the dollar yen has shown greater moves to the downside post CPI softness, especially when inflation surprises on that low side. And that's the sensitivity for the dollar yen right now from a macro perspective. If we start to see inflation surprising to the downside, coming in below market's minimum expectations, then typically you expect the dollar yen to fall sharply lower. And you can see that when the dollar yen really does fall on these CPI days, they can be really quite marked. Maximum falls of 3.66%, greater than 2%. And when the market's very sensitive to inflation data, it's more likely to surprise to the downside than the upside in recent history. So this is definitely something to look at. Now, the prior CPI print came at 2.8% year on year, showing a moderate cooling in price pressures. So inflation is generally tending lower, but if we see a print that comes in well below market's minimum expectations, then watch out for potential greater falls in the dollar yen than you might otherwise expect. And you can see the largest drop in the last 5 years has been 3.66%. So that can help set expectations in terms of what a surprise print may end up moving. Now, all outlooks have risks. Of course, this is no exception. The main risk here is if there's a sharp uptick in US inflation data, that can send the dollar yen higher out the print. But just notice there is a bias for dollar yen falls rather than gains as we head into this next CPI print out of the US. Don't just trade it, season exit. Sign up here at Season X where you can get literally thousands more seasonal insights that are just waiting to be revealed.